Hello and welcome to AI Market News by LM. The US dollar is absolutely on a tear against the Japanese yen, and it's getting dangerously close to a level that has the entire market on high alert. So the big question is the Bank of Japan about to step in and try to stop the slide? Let's dive in and break down exactly what's going on. It's a classic story we see in the markets, right? When global turmoil kicks into high gear, money scrambles to find a safe place to hide. And right now, that safe place, the ultimate safe haven, is the US dollar. To really understand why the dollar is soaring against the yen, we first have to look at what's causing all this panic in the first place. The backdrop for this massive currency move is, simply put, a world on edge. There's some serious geopolitical stress out there, and it's sending ripple effects across every single market. An escalating conflict in the Middle East has really sent a shockwave across the globe. We've seen oil prices make their biggest weekly jump in years. In response, equities have just taken a nosedive, with the Dow falling almost 800 points. And the VIX, the market's fear gauge, it shot up, which tells us there is some real anxiety among investors. This is what we call a classic risk-off scenario. So when fear completely takes over, where does all that money go? Well, it flows into the undisputed king of safe havens, the US dollar. You see, there's a clear pecking order when it comes to safety in the markets. And when there's a major energy shock, the US dollar becomes the ultimate destination. Why? Well, because US financial markets are the deepest and most liquid in the entire world. And they offer stability that you just can't find anywhere else in a crisis. Even the traditional safe spots like gold and the yen, they've been totally sidelined. King dollar is reigning supreme right now. And this dollar strength is crystal clear when we look at the USD/JPY chart. I mean, the pair has just seen this massive surge, recently hitting a high of 157.85. Now, this isn't just some small move. It's a really powerful trend, and it's being driven by that global flight to safety. But that's only half the story. To understand why this chart is so explosive, we need to look at the other side of the pair. See, it's not just about dollar strength, it's also about a very, very pronounced yen weakness. So here's the crucial point. The very crisis that's boosting the dollar is actively hurting the yen. Japan is a massive importer of energy, so when oil prices spike like this, it acts like a tax on their entire economy. This just adds to the yen's long-term weakness, which really comes from decades of near-zero interest rates. It all comes together to create a perfect storm, a globally strong dollar meeting a fundamentally weak yen. And the result? A powerful one-way ticket higher for the USD/JPY pair. With this kind of momentum, traders and strategists are all starting to zero in on one specific, big, round number. It's a level that feels almost magnetic at this point. 160. That's the number on everyone's lips. It's a huge psychological and technical level. For weeks, it felt kind of distant, but with this recent acceleration, it now seems like the market is absolutely determined to test it. And we don't even have to guess. Market experts are saying it loud and clear. Shigeki Sano over at Mizuho Securities stated that they expect the dollar-yen pair is looking to retest 160. And when major players are all targeting the same level, well, it often becomes a self-fulfilling prophecy, unless, of course, something or someone stands in the way. But there is a very powerful force that could stop this rally dead in its tracks: direct intervention from Japanese financial authorities. So for anyone who's not familiar, currency intervention is basically when a central bank steps directly into the market. In this case, to strengthen the yen, the Bank of Japan would start selling US dollars from its reserves and buying up massive amounts of Japanese yen. This creates a kind of artificial demand for their own currency. Now, this isn't something that just happens at the flip of a switch. There's a process of escalation. First, we get what's called verbal intervention. Officials start talking, expressing their displeasure with the rapid moves. That's already happening. The next step, which is often seen as a final warning, is a rate check. That's where they call up the banks to ask for prices. Sources say this actually happened around the 159 level earlier this year. If that doesn't work, then we get to step 3, direct physical intervention in the market. And many believe the 160 level is that line in the sand. So we've got a standoff. The market is pushing higher, and the Bank of Japan is pushing back. What could be the final catalyst that actually triggers a showdown? Believe it or not, with everything else going on, a good old-fashioned US jobs report could be the final straw. A strong number could signal that the US economy is still resilient, sending the dollar even higher and maybe forcing Japan's hand. On the other hand, a weak number might give the yen a much-needed but probably temporary break. And here are the numbers we're all watching, pulled right from investing.com's economic calendar. The forecast for non-farm payrolls is just 58,000. That's a pretty big slowdown from the previous 130,000. Now, if the actual number comes in much higher than that, well, that could be the green light for dollar bulls to make a final run at 160. And all of this leaves us with this one final critical question. We have this unstoppable momentum from the market pushing towards a key level, and it's meeting the immovable object of a central bank that seems determined to defend its currency. So, which force is going to break first? That's the billion-dollar or maybe the trillion yen question for the days ahead. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in the summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.